If you're driving and you can't do the chat, obviously, then just, at the end, feel free to just pipe up and ask questions, and we'll answer them as best we can. I'll try to call on people if you've got your hand up, but if not, I'll just we'll just speak up if you hear a lull, and should be fine. So. Hey, Nick. Hey, Pamela.
Hi there.
Good morning.
All right. I suppose we will go ahead and get started. We're about 5 minutes after 11, so I'm sure we'll have a few more pop in. But let me thank you guys for coming. I appreciate it very much. This is pretty important information, and so hopefully you'll at least know about it, or you'll leave with the knowledge. So what's going on with condominiums, and you guys have probably heard some stuff about this, but it all started with the collapse of the condo in Miami Surfside complex last year. And other than the human tragedy, which was obviously horrible, the other piece of that was a problem. Daisha, are you recording? The other piece of that that was a problem is, the losses that occur. Like, I guess Fannie, Freddie sat back and kind of thought about it and said, gosh, we really hadn't thought about the condition of some of these older condo complexes, and there was kind of a hole in their guidelines. So Fannie Mae's new stipulations went into effect January 1st, and Freddie Mac's hit at the end of February. And so it's just really starting to, these new guidelines have been out for a while, but it's really just starting to hit the industry. And so they realize they have this big hole in their coverage. And we're talking now, just to be clear for everyone, we're talking about conventional loans. So we're talking about Fannie Mae and Freddie Mac, and then jumbo loans, which most of the time, 90% of the time, follow the Fannie Mae Freddie Mac guidelines. So the jumbo, for approving a condo, the jumbo lenders and programs are going to follow Fannie Freddie. So this does not include FHA, and it does not include VA, which we all know there's not a lot of FHA and VA happening right now anyway. But if you do have a client that's trying to buy in a condominium, as long as they're on that FHA VA approved list, we're done. That's, there's a few questions we have to ask to be sure, but there's none of this stuff is going to be part of that. So this is conventional and jumbo only. But before I get into exactly what's changed, for a normal loan that's not a condominium, there's two pieces of information that we need to approve it. The first one you're all familiar with is the borrower themselves needs to be approved by the lender. We want to be sure they're solid. We're getting pay stubs. We're doing all that kind of stuff. We all know about that. The second piece is the collateral. Is the property they're buying worth what they're paying for it, and how's the condition and all that stuff? That's what the appraisal does. So those are the two big pieces of any lending thing, except if it's a condo. And there's a third piece, and that third piece is the condo complex itself up to snuff, both financially and condition-wise. So we have to do another whole piece of approval when there's a condominium, which is why lenders oftentimes, if you send over condo contracts, we're like, oh, it's a condo, we can't move that fast, because we've got this whole third piece we have to do, and we're beholden to either the HOA, if the condo is self-managed, or the management company to get all this information back to us. And so standard procedure for years and years is we send over a condo questionnaire. Well, when this collapse happened, Fannie Mae and Freddie Mac have added, and I'm going to show you our condo questionnaire in a minute. I'll share my screen, so if you're driving, it might be hard to see. I'll try to read through it as we go through it. But Fannie and Freddie added a bunch of questions that have to be answered on these condo questionnaires. So I'm going to show you our version of this questionnaire, but every lender will have one that's almost identical, because every lender's got to go through the same process. So whether you use us or not, all this will apply nationwide. It applies everywhere. And so the questions are really around the condition of the building, and is there any deferred maintenance and that kind of thing. So let me share this with you really quickly. Share screen. Let me pick the correct screen. There we go. Hopefully you guys can all see that. And if not, somebody speak up. But this is a standard kind of condo questionnaire. And so this is the kind of full thing. This one has about 35, 36 questions. Is the project 100% complete? Is it subject to additional phasing? These are all questions we have to answer for Fannie Mae, Freddie Mac, and they've been around for years. Has a developer transferred control? What percentage of them, how many units are there? How many are sold and closed? How many are under contract? How many are primary residents? How many are owned by the developer? On and on and on and on. So we've got to get all this done on a condominium, and this is all normal stuff. But if we scroll down a little bit, are the units in the project, are they attached, detached, et cetera, et cetera. But here's the new, some of these are new and some of these tail into the same thing. So the first of these 5 questions, are there any pending or outstanding special assessments? So Fannie and Freddie feel if there's special assessments that are pending or outstanding, then there's obviously deferred maintenance. And if there's deferred maintenance, then why isn't there enough money in the budget to pay for the deferred maintenance? Why are we having to do a special assessment? And that's a warning sign. So if they say yes to this question, they being the HOA or the management company that's answering this on behalf of the HOA, we've got to dig deeper. The next question, and this is the big one, does the project have any significant deficiencies, defects, substantial damage, or deferred maintenance? If yes, please explain and provide the supporting documentation. Think of that question for just a minute, everyone. Think of the liability of answering that question. So if you're a brand new complex brand new condo complex built a year or two ago, you can answer that, there's no deferred maintenance, it's a year or two old piece of cake. But if it's been around 10 years, it can create, that I don't know. If I'm the management company, I don't know if there's deferred maintenance. I'm not going to answer that question. You don't answer the question, Fannie, Freddie aren't doing the loan with anyone. It doesn't matter if it's me or Rocket Mortgage or whoever. They're just not going to do that loan because it doesn't meet the guidelines. Or if they say, yes, there is deferred maintenance, then we've got to really get into what that is. Is it structural? Does it create a safety hazard? And I'll talk a little bit more about that when I get to these questions. The next question says, has the project received directive from a regulatory authority or inspection agency to cure unsafe conditions? The next one says, has the project failed to obtain an acceptable certificate of occupancy or passed local regulatory inspections or recertifications? And then the final one, which has always been around, but also points to maintenance issues, is the HOA involved in any active or pending litigation, including pre-litigation activities such as arbitration or mediation? So those questions right there, though they've only added a few questions, are huge, huge game changers, because I think what happened initially, and maybe what's going to start happening now, is this is all still really, really new. These questions have just kind of started appearing on condo questionnaires at the first of the year, or maybe as little as a month ago, if you're sending the loan through Freddie Mac. So I think what's happening is on a lot of the projects we're seeing, you've got the people, since most projects have a condo management association managing and filling these out for them. I think you've got just kind of a hourly person that's there doing their job, and they see these questions and they say, oh no, there's no deferred maintenance, and they're just checking them. But at some point, the management of these management companies are going to start seeing these questions, say, whoa, we can't answer this question. We got to go back to the HOA and say, is there any deferred maintenance? Well, now you're talking to the HOA president or somebody on the board. How do they answer the question? And what are they going to say? And how do I know if there's, well, I can't say there's no deferred maintenance. So gosh, I guess I need to get an inspector in here. Well, when you hire an inspector, what happens? They find something, because that's what they do. So then now you're talking repairs and the cost of these inspection fees that have to happen. I think, a lot of this stuff will work itself out in time, meaning that these questions are going to happen. But if the complexes refuse to answer them, and a lot of them are doing that, then they're going to lose all conventional and jumbo financing. So now you can do cash only offers. So how much of your market just disappeared? Now, we do a good bit of business in both Georgia and Florida, and we're licensed in the whole Southeast. In Florida, it's probably 60% cash. So, you've still got 60% of your buyers right now. But in a lot of markets, that's not the case. But regardless, you still don't want to lose 60% of your buyer pool if you can help it. So the next thing I want to show you, see if I got the right one up, is here. So another thing that we offer to try to help if you're listing a condominium is if you call us, we can get you our condo questionnaire. You can then take that and send it through your seller to the association, and either get the HOA or the management company to fill it out pre-listing, and we can go through it and see if we're going to run into problems. And if we get it approved, that approval would be good for 90 days, which in the current market should be plenty of time to close on a condo. based on how things are. So if we get it approved, then we know, Fannie, Freddie, you're good to go and you're not going to have any problems. And it's literally as easy as checking the box. It just takes a person who has the authority to say there is no problem and we move forward. That's it. It's the liability of answering the question is where a lot of this comes in. So the next, what I want to show you is this was exactly that. This was a condominium complex in Atlanta, and they sent us everything. And what happened is we got information back. So the first, and there was 4 big issues to get this complex approved. There's a special assessment to verify the financial stability. We need the following information. What's the purpose of the assessment? How many units have paid it? Why wasn't it paid out of reserves? Is it required to be prepaid or is it spread out over a period of time? What's the payment status of our current unit, meaning the one that we're talking about? Are there any delinquent payments on the assessment? And we might end up needing an income statement to show the status of funds collected for that assessment, along with the documentation to show how much should have been collected. And it has to be within 90 days of closing. That was item number 1. But the most important one I want to bring your attention to is number 2, defects in deferred maintenance. There's new 2022 questions about deferred maintenance, and the complex opted not to answer these questions on the questionnaire. They made comments that it was beyond their expertise to answer these questions, and we would need these answered to verify there's no issues. So basically, this particular one is going to be unwarrantable. We can't do a Fannie Freddie loan in it as it stands. So, that's, I'm going to stop my screen share here just to go back and so I can see everybody. But, you're starting to get the idea of what's going to be happening this spring and summer with condominiums. I forgot to introduce, and I should have, but Katie Temple-Keithas is on the call with us. Wave at everybody, Katie, if you're watching the screen.
Hi, guys.
She's with Hodge and Temple, a great partner for us and an incredible closing attorney if you guys don't know them. But it's always good to have an attorney on the call because they're dealing with a lot of this in the background as well. So I just wanted to introduce her. And Katie, do you have anything you want to add so far to what I've said?
Yeah, I mean, I think it's so important we're doing this because for a lot of us and a lot of agents, this kind of came out of nowhere, right? And all of a sudden we're dealing with it. I've seen several deals get delayed. The main problem is that you've got these HOA management companies that are sitting out and being like, well, we're not going to take on this liability of answering these questions because what if there is a problem? So then they want to call in, the board or whomever, and all these people start to realize, well, wait a minute, we should probably just check and see if there are any of these structural issues. And then they have to get a structural engineer in there, and it's going to cost money to get an opinion and time. So I think that you are seeing a delay. And I love, Mark, that your team, I mean, you're the only ones that I know of that are doing this proactively for listing agents, so that they will know whether their condo building is going to be, they're going to see a delay if they've got this or not. And it may not be that you can say to the buyer, hey, this building's going to, the more teams helped us use these guys, but it might be, they can say, look, we've already walked this road. And when you start seeing agents who are seeing delays because of this, they may love that help. But if nothing else, it's the idea again within the condo market, it's so important to have and use local lenders because we all know how, Atlanta has some quirks and buildings have some quirks. And so we're glad that you guys are on top of this. It's impressive.
Thank you. So the next thing I want to kind of, the other 2 things in this where there was active litigation in that complex, and there was some other minor items. But the big thing I wanted to show you guys that with that, the thing I just shared was, they refused to answer those questions, and we're starting to see that. That's not going to be that surprising. So, if it's your listing or if it's your buyer, you guys just want to know that. The other thing is, what's that going to do to condo values in the short term if all your buyers are just cash while all this is happening? So, I think the long-term play here is that the bigger condo complexes that have, that are large will run into this more often. Katie said this in our call Tuesday, and so they're going to have to deal with it sooner than maybe the 20-unit complexes or the 10-unit complexes. And maybe there hasn't been a transaction for a year, and then now all of a sudden there's somebody trying to sell their unit, and the board's like, well, what's going on? So the larger complexes will have to deal with this sooner. And it's in their best interest to just get this figured out to where they can answer these questions and let normal financing happen in the complex. But so that's the first part. The second part I want you guys to think about in this crazy market, oftentimes you're either doing extremely abbreviated financing contingencies and or appraisal contingencies, right? Well, on the Georgia contracts, at least, and I know we got one person from Florida on the call, or we did, I'm not sure if they're still there. Oh yeah, I see them. But in the Georgia contracts, they provide a financing contingency and appraisal contingency. If the contracts were really done right, there would be a third one for condos. Maybe it would be on the community association disclosure for a condo contingency, so that can the lender approve the condo? Because that really doesn't have anything to do with the buyer if Fannie Freddie won't approve the complex.
Or the
However,
seller, yeah, or the seller, yeah.
It's really on the seller because they're the ones trying to sell. But the lenders, we have to use the financing contingency period to get the condo figured out. Well, if you've done a pre-underwrite with us or any, we've got the Fairway Advantage program where we fully underwrite your client, so you can make an offer with no financing and appraisal contingencies, because those two things have been handled, or the appraisal we can order quickly, but the financing is done. We now don't have an out, and your buyer's earnest money is at risk because you put zero financing contingency or 3 days, and they could put however much earnest money down. And if the complex doesn't get approved, the seller's like, well, that's not my problem. And they walk, and your buyer's earnest money is gone. So that's the second big piece I wanted you guys to not forget or not miss that, because that's a big deal. Now, I'm going to share my screen in a minute, and I can email this to anyone that wants it. You can just say in the chat that you want it, or you can send us an email, info@moreteam.biz, and say, yes, I want the copy of the condo questionnaire and the material from this presentation. We'll be happy to send it to you. But Katie has been generous enough to kind of draft up a special stipulation that you could put in your contracts specifically to protect against that happening. And I'll read it to you. It says, all parties agree and acknowledge the buyer has the option to terminate this purchase and sale agreement without penalty and all earnest money returned in the event the HOA is not approved by the lender and financing is contingent on such approval. Now, we all know it's great to have such a special step. Will any listing agent take that? I don't know.
Well,
that's for you guys, but sorry, go ahead.
No, I'm going to jump in because actually I had somebody call me after we did this on Tuesday and ask if I've seen any pushback with this step. And I haven't. I've seen it twice we've had a couple deals across our desks that have this language in it now. And I think it just is such a neutral issue because the seller's HOA has to scramble. And buyers know it could cause a delay or an issue. And everybody at the end of the day, I think, understands there's some fairness with this one. So we haven't seen any problems with it. I do think you might have to educate a listing agent who isn't aware of this change, especially in the smaller buildings, for the next, half a year or so. We also may see when they do the contract changes this summer, we may see some language in the GAR contract, maybe in the community disclosure with the condo stuff mark. So we'll have to see, but I haven't had any pushback with it. So I think that is good to know. Yeah,
that is good to know. Also in this same, if you're still seeing my screen, I've got the lookup sites for FHA, just because we get asked that a lot. So this seemed like a good place to throw it in if you guys want it. And then another step that really will help your lender out, especially with the abbreviated timelines that we're all on. And I haven't heard that there's a lot of pushback when this one gets added to all your contracts, but all parties agree and acknowledge any deadline that falls on a weekend or holiday will be extended through the end of the next business day. So if your financing contingency ends on a Sunday, we just lost 2 full days. So you had a 7-day financing contingency, but really it's only 5 for us. And that's if we got the contract the same day you went under contract. So if you went under contract Friday night, we lose 2 days, and then we lose 2 days the next weekend. So it just gives us a little bit more breathing room to not have it die out on a Saturday or Sunday or on Easter. Well, Easter's a Sunday, but you know what I'm saying, on a holiday. So that I've got those as well for you guys that might be helpful. One other thing, and this is just for the upfront underwriting program. This is not really related to condos. I just want to throw it out there. Another thing when you do upfront underwriting and get them fully approved, so you have no appraisal or a short appraisal contingency and no financing contingency. The one thing you're not covered on there is if the appraisal comes back with repair conditions. So the appraisal contingency in the Georgia contract, sorry for the Florida folk on the phone, but for the Georgia contract, the appraisal contingency only has to do with the value of the building. It has nothing, it doesn't say anything about oh, these repairs need to be made because there's, you can see daylight through the den roof because there's a hole in it. So if that is a repair condition, that would be another thing that if you waived your financing contingency, there's no out for your buyer if the seller says, I'm not fixing it. And now all of a sudden we don't have a loan because we can't close with a hole in the ceiling and their earnest money could be forfeit. So just another thing for you guys just to be thinking about. And there's not much you can do, but make your buyers aware, hey, these are some things that could happen out there. And then let's see if there's anything else I wanted to mention. I think that's the bulk of what I wanted to tell you guys. Sandy, I see your email and we'll get it sent over to you. Is there any questions that you guys have? Anybody who can just unmute themselves and speak up?
I got a question. So I know in the past, my understanding has been that, or, with other condo approvals, that depending on the amount of the down payment the buyers are putting down, the condo questionnaire can be more limited or more extensive. Is that still the case, or has this totally changed that? Thanks.
That is the case. Great question, Andrew. So if your buyers are putting 10% or more down, we can do a limited condo review. And the only thing that really helps us is we do not have to get financial docs from the HOA, but all the deferred maintenance questions are still going to be there. They, under any condominium, if it's going to have conventional financing, all those deferred maintenance and, are there pending litigation, all those questions are still there. Where it would help us, and this is another change that's happened again as part of this, it's smaller, but if you have somebody putting 3 or 5% down, some condo associations have been around a long time and have huge reserve funds, right? They've got $1 million in the bank to do, needed repairs and things like that. So in the past, if you're putting 3 to 5% down, we have to get a condo budget to show the budget for the condominium, and we have to look into the financials. And one of the line items required to be there is that 10% of that budget each month goes to the condo's reserve fund. And in the past, if they had $1 million, if they had a huge amount of money, we could document those assets, and Fannie Mae and Freddie Mac would waive that requirement that 10% of the money is going into that reserve fund. They have suspended that, and we can't do that anymore. So it doesn't matter how much money they have in assets. If your client's putting 3 to 5% down and that condo complex is not moving 10% of their money into the reserve fund each month, then you also don't have a Fannie Freddie loan. And they did that at the same time they made these other changes. So, again, the option there would be borrower come up with 10% down, and then we don't have to ask those questions. Or maybe it doesn't, maybe the deal's dead at that point. So anyway, just wanted to let you guys know, about that piece of it as well. Did that answer your question, Andrew?
Yes, sir. Thank you.
Yep. Anybody else? Any questions on what's happening in the condo world?
I have a question.
Sure,
Mark.
Cindy.
Yeah. If I know we're talking about condos, but if you can share 1 or 2 things, like the biggest difference between the townhomes and condo special steps, if any, or does this pretty much apply for for townhomes?
That's a great question. And it's a tricky question. So the short version is, if it's a fee simple townhome, none of this applies at all. It's treated just like a single family home. We don't have a condo questionnaire. Unfortunately, there's a lot of properties in Atlanta masquerading as townhomes that are actually condominium ownership. So they have a drive-in garage, and they've got 3 levels, and the kitchen's on the 2nd level, and you got some bedrooms up top, and you got a small bedroom down at the bottom, and it looks and feels just like a townhome, but they have set it up condominium ownership. And so you've got to be really careful. And that's always a challenge for us on the lending side, is because it affects our interest rate too. If it's condominium, it's going to carry a higher interest rate than fee simple townhome. So that's why we're always asking, is this fee simple? Katie, did I say that right? Do you want to add anything?
You did. The way to really think about it is, if it's fee simple, then the townhome owns the dirt it sits on, right? It might be part of an HOA. They share mailboxes and sidewalks, and because it's got shared walls, they have insurance policies and things like that. But if it's a condo, it's easy to think about it with a mini multi-story big spire building, right? Where there's 25 floors or whatnot. But in that scenario, each condo owns a portion of the dirt the building sits on. But some of these townhouses, there's several communities around town. They kind of incorrectly sometimes, and sometimes they choose to, but basically those townhomes don't necessarily own the dirt they sit on. The whole row owns a part of the dirt. Does that make sense, of all of it? And that's where the confusion comes in a lot of times with, is it a townhome or a condo? It really matters how the ownership was set up for the dirt that the whole project sits on. And that's something we can usually discover in the title search. So sometimes, you know, the lenders are coming to us to certify that.
Yeah, to give you a quick example for those of you that are really familiar with Decatur, on Adair Street in Decatur, there's a community called the Decatur Townhomes, which is condominiums. So the name of it is Decatur Townhomes, and they are and they look just like townhomes, but they set it up as condominium ownership. So it's tough. It's tough for us. So, but that's a big deal as to whether this applies or not. Is you might think you have a townhome, and it turns out you have a condominium, and they're, you know, not willing to answer deferred maintenance questions, and then we're, you know, maybe having a problem. So, any other questions from anyone?
Just one more comment, Mark. We talked about this earlier and I thought it was a good point, but I do think that as these master insurance policies for these big condo buildings comes through, I do think ultimately these requirements are going to kind of mesh with that. And so probably the insurance companies are going to require the buildings have these annual checkups or things like that, or every 18 months or 2 years, so that they can certify to this stuff. Because I think the insurance companies will also have some skin in this game of like making sure these buildings are sound, and being able to certify to it's going to be part of it. So I think we're on the front end of the confusion and the complications. And these big buildings, like we talked about, are going to figure it out sooner. So right now, the STIP is important, understanding that it is causing delays right now. And, you know, partnering with you guys is going to help people with buyers and with listings at the moment.
Yeah, and of course, that's all going to drive up your monthly HOA dues as well, because, you know, you've got to pay for these inspections and fixing the stuff that they find and stuff like that. So, you know, in the end, that's probably better for, you know, you're going to have a better quality, safer condominium complexes across the country. But just this spring and summer, and maybe into the fall, you know, it could be a rocky road if you've got condo buyers, or if you're trying to list condos and get them sold. You know, there's some things you can do to be proactive, but just wanted to share that with as many folks as we can, so that, you know, the more of you guys that know and can share with other folks that you know, the better. And we did record this, so if you know anybody that wanted to be here and couldn't be here, you can just reach out to us, and we'll get it posted somewhere. We'll get you a link where somebody can go watch this if they've missed it. Any other questions? All right, thanks everybody. Have a great afternoon. Happy weekend.
Bye, guys.